The broadcast is now starting. All attendees are in listen-only mode.
Welcome everyone to another educational and revenue-driving webinar from your good friends at Synergy Marketing. I'm your host, Eric Estrada, the Tax-Free Ninja, and today we're going to be talking about leverage without limits. We'll be going over 3 sales ideas for the new Liberty Mark Heritage Maximizer Rider that you'll want to know and incorporate in your practice right away. Now, regardless if you already have access to Liberty Mark, you're currently selling it, you're not selling it, or if you're just looking for new ideas altogether, I've got something in store for you. But before we start, I want to let you know that today's product is created, designed, and distributed by our good friends over at the Legacy Marketing Group. And before we get into the meat and potatoes of today's conversation, I want to challenge you to think outside the box. Now, what I mean by that is typically when we sell fixed annuities, fixed index annuities, we sell them for 2 reasons, protection and income. So what I want to show you today are brand new ideas for money that's not meant for income that you can talk to your clients about, bring new solutions, new value, and earn brand new business altogether. So before we go into the 3 sales ideas, I want to review Liberty Mark, one of my favorite products, one of my favorite innovations that's out on the market today. Now this is our A-rated pure accumulation solution, okay? This product is meant for the money that your clients don't plan to use for guaranteed lifetime income. It issues all the way to age 85. There's an optional 7 or 10-year commitment. It also has an unprecedented dual bonus. What that means is on our 10-year bonus version, your client can get 5% day 1 on the account value, and then at the end of the 10-year schedule, they get an additional 10% on top of the account value. That is a bonus on top of a bonus. It also offers diverse options with uncapped growth. There are 7 different index crediting methods on here. 3 of them are completely uncapped. It includes real estate, gold, risk control options, even an inverse option which allows you to earn when the market goes down. There really is a strategy for any market to help you and your client allocate premium according to what they think is going to happen over the next 12 to 24 months. Now, the one thing that makes this product a little bit different, and I like to compare this to flying first class or to paying for premium gas, is it does come with an optimizer fee, okay? Now, this is an upfront fee that allows this annuity to give your client more than your typical annuity that they've seen. Now, the optimizer fee is 1% on the 7-year product and a 1.25% on the 10-year product. And for those of you who want something that maybe goes a little bit faster, we do have our SE version, which offers even higher caps and rates for just 50 basis points more in optimizer fee on either schedule. So that's a 1.5 on the 7-year SE product and 1.75 on the 10-year SE product. And what I like best about this annuity is it's perfect for high net clients. How many of you have ever tried to talk to a client that's very savvy, has lots of money invested, very diverse, and they snub their nose at annuities because they're either too boring, too vanilla, they don't yield enough for them? Now you've got something for them. I like to call this a rich man's annuity because you can still talk to them about diversity and uncapped growth. So here are 3 ways that you currently could be using their Liberty Mark even without the Heritage Maximizer Rider. First of all, there's market rescue. If any of those clients, those high net clients, have an asset that's losing money, you can put it in a new home that has principal protection and still offers diverse, uncapped growth. Portfolio balance. Maybe your client isn't ready for any income planning, or maybe they do have a ton of money on them still in the market, and they're completely unbalanced according to the rule of 100. Now you can help them allocate the right amount, the right percentages between fixed and at-risk assets by using the Liberty Mark option, which again gives them diverse, uncapped growth. And finally, I love this annuity for RMD planning. If you want to work with high net clients, you should be talking about required minimum distributions. It's a problem that people with too much money have. Here's a fixed index annuity that has the earnings potential to replace and replenish the distributions they're taking through the index gains that it earns along the way, okay? So market rescue, portfolio balance, rebalance, and RMD planning. Now, I want to introduce something brand new today with 3 brand new sales ideas to the new Heritage Maximizer Rider. So a story that's already great and uncapped and A-rated has just got even better. Now what this is, it is a guaranteed enhancement at death. Okay? So what this rider does provides a guaranteed bump when your client passes. That bump is paid in a lump sum. It's available after the 3rd contract year. And what it does is from the 4th contract year going forward, it'll add a 30% increase to the account value when your client passes. So their premium plus anything learned along the way will get an additional 30% on top paid in a lump sum to the beneficiaries. An even better point to that is that the index gains credit till date of death. So your client truly gets every single ounce of interest earned plus 30% on top of that. Now this is available only on the non-bonus products, okay? So you can't couple this with the dual bonus opportunity, but that's actually a better play because the caps and rates are a lot higher if your client chooses to opt out of the bonus. Now it's only 30 basis points for this rider, as we like to call it, 30 for 30, and you can offer it to your clients all the way up to age 75, okay? So any clients that are 75 or younger can take advantage of this rider, and there's no limit to what the total payout can be in death benefit. The longer they live, the more interest and earnings that we're going to be able to increase by 30%. So idea number 1 is let's maximize any leave behind money that you already have on the books. So what I want to challenge you to do is review the annuities, review the accounts that you know your client's not spending. Maybe you didn't have an idea for it the first time you met around with them, and you know there's nothing really special about the account to help give some guarantee enhancements when the client passes on. Maybe you have some annuities that the client had originally meant for income and they didn't end up spending it. Maybe they had a change in plans, okay? So what you can do is go back and talk to them, inform them of these new options, and let them know that you have something brand new and different that can give a guaranteed 30% on top of strong interest earnings whenever they pass on and the asset moves on to the beneficiaries. Now, we have something pretty unique that if you partner with us to offer this product, we can put in your hands, and that's use the client approach letter. What we have is a pre-designed letter that you can send out to your clients, anyone that already maybe have some leave behind assets with you, and it encourages them to visit with you and sit down and talk about some new options that it can increase and enhance the current situation on any assets that are earmarked for the next generation. So idea number 1 is to maximize the leave behind money. Idea number 2, here again we're talking about RMD planning, and what the 30% increase allows us to do is a guaranteed RMD replenish. So what I encourage is talk to your clients ages 67 and up. It's around that age they begin to start thinking and hearing about RMDs from you, from their tax professional, and from other retired friends they have that run into the RMD problem as well. If you have a high net worth client, a high net client that has money that they're planning on leaving behind, trust me, they don't want to spend this if they don't have to, okay? So what it'll allow them to do is they can take the unwanted RMDs. They can take the 3.5, 3.8, 4%, whatever it may be, each and every year, and we already know that Liberty Mark puts them in a position to help recoup that RMD through the strong earnings potential. When they pass, or if they pass after year 3, they're going to, on top of the earnings, they're going to get a guaranteed 30% recoup to the heirs. So the money that was distributed while they were alive not only gets replaced to the interest earnings, but they get an additional 30% on top of that, giving a guaranteed recoup on those unwanted RMDs they are taking. What I also encourage you to do is to give them a head start. Don't wait until they're 69 or just before age 70 and have to put them into this. If you put them in a Liberty Mark a few years early, they can stack up some initial interest to give them a hedge for those unwanted distributions taking that will even increase the value of that 30% recoup when they pass. And idea number 3 is the single pay life alternative, okay? So how many of you have written a single pay policy out there? It's supposed to be simplified issue, no medical or blood work, and your client gets declined. Well, don't give up just yet. Let's take a look at an example of something you may have ran into in the past. Let's say you have a male, age 70, with the $100,000 in premium. Maybe he has some money sitting at the bank, he has a CD, maybe he has a non-qualified annuity, but he has $100,000 that he wants to maximize and leave more behind to the beneficiaries. Now, if you were to get approved into a single pay life policy, on average, he'd get about $146,000 in guaranteed death benefit. But let's say that after doing the telephone interview or doing the simplified issue process, you find out he's not healthy enough. Well, don't give up just yet. Remember, whatever the client puts in, as long as they live 3 years or longer, they're going to get a guaranteed 130% leverage on the asset value, and that's not including the gains or considering the gains that they earn along the way. So for instance, if your client sees a 20% gain, a 20% increase in account value, when they pass, the beneficiaries would get $156,000 in death benefit. If you see a 40% gain, let's say they live a little bit longer or have some really good years, then that 40% gain turns into $182,000 death benefit. Now, we may not be able to create the same tax-free scenario that we would with the single pay life, but having some sort of leverage on their asset value is better than having none at all. So there's no limit to the maximum death benefit you can leave behind. The longer the client lives, the more they earn, the greater the lump sum that's going to be left to the beneficiaries. So here's how you can get the word out. Rethink the fact finder. If you've met with anyone over the last year or over the last 24 months and you know you talked about money that they don't plan on spending, they don't plan on living on, go back to them and let them know that you have some new solutions for leave behind money. I also want you to rethink the fact finder going forward. Don't just focus on the income producing assets. You can also talk to them about the non-income assets as well. You can also send the client letter. If you know you've written annuities or you know your client has money in accounts that they don't plan on spending and they don't have some sort of guaranteed enhancement at that to the beneficiaries, then send them that letter and encourage them to come down and visit with you one-on-one. Host small lunch and learns. If maybe you have, bring in your top 8 clients, come in and let them know of some new ideas. You can also add a new seminar topic. Either way, you want to let clients know that you're more than income planning. You can also talk to them about the money they don't plan on spending and that they plan on leaving behind to the next generation. Whatever you do to get the word out, make sure you send us your receipts. Legacy also offers a very generous and very liberal marketing reimbursement program where anything that you're paying for to generate new business that goes in a Liberty Mark or any other Legacy created product, you can receive up to 100% of the cost on the receipts you turn in. That way you can keep the wheels greased and you're not going broke trying to find new ways to write business. So ask yourself this: am I talking to clients about non-income assets? Do I have solutions for the high net client? Do you have an annuity that's a little bit more attractive to that savvy investor that would get them to use an annuity for principal protection? Do I have solutions for guaranteed required minimum distribution recoup? And finally, do I have an alternative to wealth transfer? Do I have a home for any single premium, single pay life cases that get declined where I can still give the client a guaranteed leverage and asset value? If not, give us a call. We'd be happy to talk about any assets that you want to go back and get in front of or any strategies that you incorporate into your fact finding in your solutions presentation going forward. 888-694-7271.